Hello, lovely people out there. How are you all doing? I'm Kate Hill, and I'm here to give you, as always, the best unbiased and honest commentary about our property markets, along with amazing hints and tips about all things property. So stay tuned for all your latest property news. Now, just quickly, I have to show you the copy of my latest book. It is hot off the press, people. I am very proud. The Female Investor, Creating Wealth, Security and Freedom Through Property. Available in all good bookstores. And I will put the links below where you can order it online. Okay, enough of that. Let's get on with it. Now, as if there wasn't enough rental stress going on, I reported on that last time, you might remember. Capital city rents are also continuing to rise as vacancy rates fall further throughout Australia. SQM research say that vacancy rates in the smaller capital cities are below 1% and around 2% in Sydney and Melbourne. Vacancies are under 1% in most regional markets. Capital city average asking rents have increased to $626 per week for houses and $447 per week for units. This follows significant decreases in vacancy rates in all cities in the past month and over the past year. SQM's analysis found that Perth, Brisbane and Canberra had the largest increases in asking rents for houses during the 4-week period. The latest increases mean that asking rents have increased by 14% in the last 12 months for houses, 8.5% for units. Given the dramatic tightening in vacancy rates, we are seeing an ongoing acceleration in weekly market rents across capital cities, SQM say. We can expect capital city rents to rise by 10% in 2022. Australia is forecast to have a shortage of dwellings of over 163,000 by 2032. Now, unsurprisingly, this forecast comes from property builders and developers. Mirvac and Boral have told a National Housing Finance and Investment Corporation panel that the shortfall is the result of an increase in single-person households and the return of migration-driven population growth. They said that adding to the issue is that planning regulations around the country are quite convoluted, complicated, particularly in New South Wales. We have migration turning on at the same time as we're going to have an undersupply of housing, they said. So that takes us right back again to the supply issue and the need urgently to get more supply into the market, they said. The NHFIC's State of the Nation's Housing 2022 report predicts the number of single-person households will rise from 25% to 27.5%. Both Mirvac and Boral say this means unit developments will be an increasingly important part of Australia's housing picture. And hot on the heels of that news item, a slowdown in development of new apartment buildings, plus a trades and materials shortage, could lead to an undersupply of apartments along Australia's east coast. I don't know why anywhere else, but there we go. Market forecasts by Charter Keck Kramer, who are a real estate consultancy, on the Brisbane, Sydney and Melbourne markets, predict that the number of apartments completed in 2024 will be about half of what is being developed this year. It says this could result in a severe undersupply of new homes in 2 years' time, which will add further pressure to the rental market. Charter Keck and Kramer say that overseas investors drove previous apartment building booms, but they do not believe there will be the same level of demand for investment, even with international borders now open in Australia. They think that investment will more likely come through institutional funding in the future. With vacancy rates at historic lows in many regions, the looming shortage of new apartments is expected to make it even tougher for renters to find and afford a rental property. The value of property bought by self-managed super funds increased by 22% in the past year to a record $140 billion. Borrowing by SMSFs to buy residential and commercial properties also increased by 22% during the same period, according to the Australian Tax Office figures. The SMSF Association says that in 2021, the biggest increase in property investment was by company owners purchasing their offices, warehouses or factories and leasing the properties back from their super fund. Tax office figures show that about $91 billion was invested in non-residential property. Now, there are strict rules for buying property in an investment fund. H&R Block say that tenants are still required to pay market rent, and while it might be a worthwhile investment for a business owner, they still needed to consider if it was a good investment for their actual super fund. They say that owners need to take into account the yield and expected growth, but we'd say that about anyone, wouldn't we? Now, we will keep you posted on all things property from around Australia as our year progresses. Don't forget to hit the subscribe and the like button if you're enjoying the free content, and I will see you all again really, really soon. Bye.